Hi guys, welcome back to the Money Control live stream. You are watching Markets with Santo and CJ. Well, the weekend is just half an hour away, but there is no yay on this Friday for the Lal Street. Indices are all set to close in the red, deep red.
Well, CJ, something similar to what I've been saying all throughout, that it's a market which is not going anywhere in a hurry. It just takes one step forward and then moves two steps backward.
Well, gloat away, Santo. But what is driving this market crazy? What is pulling the market, indices lower? Well, for starters, it seems that traders are just unwilling to carry on their open positions to Monday because the weekend is coming up, and in a highly volatile environment that we are currently in, any bad news can come out, and that can catch traders, especially those who want to take bullish positions, on the wrong foot. Given what is happening with Russia, Ukraine, there's talk of new sanctions on Russia anytime now. So traders just want to be cautious and safe at this point of time. They do not want to stick their neck out, it seems. And that said, there is actually a little bit of glimmer of hope, and that hope is coming from, once again, yours truly, retail investors. The Nifty small cap index actually was largely in the green just 5 minutes ago. It turned into the red, but is still outperforming many of its mid cap and large cap peers. The Nifty small cap 100 index was down about 0.4%, which basically tells you a lot of money has been pumped in by retail investors, although we have seen a little bit of minor profit booking towards the end now.
Yes, CJ, also it's a little surprising, when I've been talking to traders and investors. Overall, the near-term outlook on the market remains bullish, and I fail to see why, given so many negatives which are there on the horizon. But still, the general feeling is that mid-cap and small-cap shares should continue to do well in the short term.
Well, I hope you're right, and the dealers and traders that you're speaking to are bang on. That said, well, markets are where we left them off in the morning, but there was some spectacular action happening on individual counters, right, Santo?
Well, metal stocks today were among the notable underperformers, particularly aluminium shares led by Hindalco. Hindalco was down a little over 5% today, mainly the rub-off effect of Alcoa reporting disappointing quarterly numbers. Well, if you look at it one way, it was not really disappointing numbers, but as usual, you never know what how.
But Alcoa is basically one of the biggest aluminium producers out there, and generally, when you have a global market leader reporting earnings in a particular industry as close as aluminium is, it will tend to have a rub-off effect on even Indian
but there's an important point. If you read the commentary, what they're saying is that basically because of these supply chain disruptions and the increase in prices, that is leading to softer demand from the consumer. So clearly high prices and supply disruptions put together is forcing some kind of a pushback from consumers, and they're kind of deferring their orders. So this point you were making earlier all throughout, that high costs are always good for the producers, doesn't really work that way. At least you're seeing that in the case of aluminium here.
Well, let's look at the facts. Alcoa reported record high earnings. Yes, analysts were expecting it to report even greater numbers, but if you look at it in a very standalone and absolute sense, Alcoa's number were record profit, record operating profit, and even the commentary from the management is not that bad. They're expecting the average realization in the aluminium business to be higher than what they reported in the first quarter or the March quarter of this year. That tells me only one thing, that profitability is going to improve. It's not going to go down or stabilize at this current level. Next up, aluminium prices are going to stay elevated because remember, there are sanctions being imposed on Russia which are not going to be withdrawn even if the war were to end tomorrow, right? Sanctions are political instruments, so they take years to wind down. I mean, just look at what is happening with Iran. It has taken years to wind down those sanctions, and now they were back again in 2015. That said, Hindalco per se, it's had a stellar show over the past 1 year. I mean, almost record profits, record profitability almost on a quarterly basis. And this quarter and the next quarter specifically is not going to be any different. I mean, just to give you a reference point, Kotak Equities expects 112% year-on-year growth in Q4 EBITDA of Hindalco. So that tells you and gives you a picture of the sense of momentum that earnings of Hindalco have.
See, it's not just about the earnings, CJ. If you push the share price up sharply, then accordingly expectations also goes up, right?
Yeah, but that does not change the longer term picture for the stock.
We can continue. We can continue arguing over that.
Absolutely, we can. That said, That's another stock that was really, among the market chatter was Adani Ports. The company came out with a report of an acquisition. They have acquired a marine services company called, if I'm not wrong, Ocean Sparkles, right? And so this acquisition, now why is this acquisition important? Ocean Sparkle is largely into marine services, including dredging, a lot of port services, a lot of vessel services. And given that Adani Ports has been, expanding its footprint around India, it's been acquiring distressed ports all over the country, and all because it expects cargo volumes to go up as India's growth rate jumps up, as the export side of the economy does well. It expects a lot of increase in cargo volumes. And this acquisition is largely going to add into the current story of Adani Ports. Plus, on an EBITDA level as well, if you believe what analysts are saying, the acquisition should add to Adani Ports' EBITDA at least.
Well, CJ, you place too much faith in analysts, and if I speak about valuations, again, you'll say that I'm sounding like a stuck record. Anyway, now see, the ports business is heavily dependent on global trade, and the outlook for that, if you see the outlook for global economic growth, that's being the forecasts are being steadily downgraded. So that should tell you something about where the kind of impact that would have on global trade. That's one point. Secondly, if you look at Adani Ports profit numbers over the last the top line has been growing steadily, but none of that is really flowing into the bottom line. The profits have been fairly range bound over the last 3
That is because they have been investing a lot of their money back. That is the reason why it is probably not reflecting on the margin profitability as well as bottom
Fair
line.
point. And lastly, how much would you pay for a port business? So right now they're quoting at about 26 odd times forward earnings, which again, the same analysts say that is fairly expensive for a ports business. So considering all these factors, I would say that it's a slightly risky play at this point.
There are always, exceptions to the historical trend. A lot of the analysts also that you talk about tend to depend a lot on what has happened in the history. And sometimes there are odd companies who tend to defy history. We have had many examples in the market, right?
Well, ICICI Lombard, the stock was down close to about 6% today.
Badly hit today, huh?
Yes, it had reported quarterly numbers yesterday, and the numbers were way short of market expectations, which is why you saw a huge sell-off in the stock.
Yeah, I think it is a very I mean, ICICI Lombard's, the stock performance today was very symptomatic of the mood of this market. I mean, if you're underperforming just by a little bit,
right,
market is punishing you very heavily at
that
this
is
point
what
of time.
What happens when prices move up ahead of fundamentals. This is bound to happen, nothing surprising here. And there are also some lingering concerns about ICICI Bank planning to reduce its stake in ICICI Lombard. So the picture not looking very pretty for the stock at this point.
No, if you go by just today's performance, maybe the picture is not looking that pretty, but if you just zoom out a little bit, there are some factors that investors who are in ICICI Lombard can take heart from. For starters, interest rates are expected to rise, as we know. I mean, even at home, globally we have heard interest rates are already rising, but even at home, a lot of economists expect RBI to start raising rates as soon as the June meeting. Now, higher interest rates are expected to be beneficial for ICICI Lombard, especially in its debt investment portfolio, because higher interest rate will increase the yield that it is earning on its debt portfolio. That is one. Second point is that after the slowdown that we have seen in the healthcare segment of ICICI Lombard, the health insurance business, where it lost market share to some of its peers during the past 1.5 years, that analysts expect the worst is over there. They are going to recover a lot of that market share going ahead. The management has promised aggressive top line growth going ahead. So, and healthcare insurance will probably be one of the driving factors for that. And lastly, there is an indication that motor insurance premiums from third party could rise, and if that happens, given that ICICI Lombard's portfolio of general insurance is largely tilted towards motor insurance as well, it could be a standout beneficiary of that move as well. So it's not all bad news if you just go by today's price action.
From a longer term perspective, maybe not.
Possibly. You have an interesting stock on your counter. I really want to talk about this one.
Okay, yes, I knew you would be waiting for that. SBI Cards, the stock was among the few gainers in today's week market, up about close to 2%. There was a block deal of close to 21 lakh shares in this stock today, and there's been some improvement in the stock price over the last few trading sessions, also an increase in trading volumes as well. Now, SBI card is one of the play on the reopening of the economy. More people go out, more they spend. I think
that's a general assumption, yes.
Yes. Do you have anything to counter that assumption?
Absolutely. So, yeah, I take your point. People are going out, so therefore banks and companies like SBI Cards have been able to sell a lot more credit cards. But selling credit card does not automatically translate into higher spending on those credit cards, right? If you look at the latest data that has come out for February, spendings from credit cards have hit a 7-month low, which is also telling you a lot about where the consumer mood is right now.
But does it say that SBI cards, spending on SBI cards has also come down?
It does not say directly that, but if at industry level, you know, if you're seeing a decline in spending, that will, I will assume that the market leader, one of the market leaders will be affected first, given that HDFC Bank has not been doing much anyway lately because of, they have just come out of the ban from RBI. Next up, so now this is, there are two parts to this argument. First of all, credit cards have started to take a bad name in themselves, because the past 1.5 years, we have seen the rise of influencers, right, on Instagram, Twitter, on YouTube, and a lot of these guys have been telling a lot of their viewers that how credit card is bad for their financial health. And that has given credit card a bad name at large, and possibly some of this lack of spending, because it's not like consumers have not been spending. We have talked about revenge traveling, we have talked about, you know, restaurant businesses doing well. So it's not like consumers are not spending. It's just that maybe they are not as happy to spend out of their credit card as they used to be once upon a time.
Well, if they are indisciplined, then I'm not really surprised, because see, if used properly, credit card is a really good tool. But I
count on you to pass judgments on other spending habits, huh, Santo? And lastly, there is competition also emerging for credit cards, and that is emerging from the recent, you know, trend of buy now pay later schemes. Now, a lot of merchants are getting into it. We know that buy now pay later has become the thing in the startup space, at least.
Credit card by another name.
In a way, yeah, exactly, without a card. And so therefore, I mean, more than what a lot of people think that maybe UPI will eat into credit card business of a lot of these companies, I feel that the greater competition or threat could come from buy now pay later. That said, so my next stock is an interesting one actually, and you would have something to say about, given the history of the promoter here. So Sterlite Technologies, the stock rallied more than 13% at one point of time today, and of course the natural question you know, appears that if it is rallied 13%, then is there any worth in buying the stock now? Now, why the stock rallied? Reports came out earlier today that the promoters are looking to induct strategic investors into the three major verticals of Sterlite Technologies. The three verticals are which ones? They are optical fiber network services, the telecom network services, and the software services of Sterlite Tech. Now, Vedanta Group, which is the promoter group, Hindu report basically quoted Vedanta's chairman Anil Agarwal talking about selling about 25% stake in each of the verticals, that too at a valuation of $2 billion each, right? So that makes a cumulative valuation of Sterlite Tech at what, $6 billion, right? Current market cap, even if you account for today's gains, the current market cap of Sterlite Tech is around $1.2 to $1.5 billion. That means prices, you know, current market prices have to rise almost 5x to meet the promoter's valuation for that business.
Well, CJ, you're the one who always believes in the judgment of the market. So, you know, if the current market cap is low, right, then there is a reason why the market is assigning that. And if you look at the, again,
you have that reason.
Yeah, again, just look at the numbers, both top line as well as bottom line for the last about 8 quarters, and they have really not gone anywhere. So, in that sense, you know, there is a reason why the market is, you know, has assigned a lower multiple for the stock. But, and this is more of a case of momentum buying. I mean, I'm not saying it can't go up, probably it could well go up. I mean, there'll be many like you who believe that, you know, probably this is a great stock because the promoter states that it's undervalued. But other than, if I were to purely look at fundamentals, then I think I would give the stock a pass.
Well, if smart money is willing to pay that much, then who am I to judge? Why would I counter their argument?
So retail is the new smart money.
It is, of course it is.
Okay.
That said, you know, we should take a status check on the market, and I'll just check my money control app and see where the market is right now.
The selling has intensified
over
the last half an hour.
Nifty 50 is down 1.3, Nifty Bank is down 2%, Santo.
And mid caps which were holding firm till about half an hour back, they've also slipped into the red.
Yes, even Nifty small cap index is down about 0.4%, 0.5%. So yeah, it's a very red closing for the market on a Friday. There is no weekend cheer on the Lal Street today, man.
Doesn't look
no
like
weekend cheer. That said, is there something we have missed?
Yes, CJ, are you used to, heavily addicted to air conditioners?
Oh,
you
absolutely. In Bombay heat, you can't live without air conditioners.
Well then I've got some bad news for you. So almost 1/4 of India's power generation capacity has been shut.
Okay.
Now the big reason for that is coal shortage, as we all know. Coal prices have been going up. Besides, there are supply chain problems also. So
what are you telling me, man? I feel that there is some bad news coming here.
So yeah, the bad news is that obviously you'll have to brace for power cuts, as simple as that. Because
power cuts?
Yeah, because if there's not enough generation, that's the obvious fallout, right?
Well, I hope that they don't happen over the weekend at least.
Yeah, the other reason is that many discoms have not been paying power generation companies on time, because of which power generation companies say that they are unable to buy.
Again, wasn't this like, is this what, 2015?
Yeah, this is a recurring story of the power sector.
Oh my God.
For all that excitement over power stocks.
But you know, Santo, as they say in the market, and you would know this, your generation has been the one which has brought this up, this, saying that every crisis is always an opportunity, right? There is always an opportunity that you can find in a crisis.
Fair point.
And I think from an investor's point of view, this crisis could actually end up being an opportunity. It's already been playing out. We've known that power stocks have been doing quite well over the past 2 or 3 weeks. Of course, a part of it is that, power stocks are usually considered as the best bet to be if interest rates are rising, if there's volatility in the market, given that their earnings are generally stable, right? But in a scenario where coal shortages are reducing power production, and it is very likely, given that the news reports that are coming in already, Maharashtra, Gujarat, and Tamil Nadu reportedly have started importing coal from other places. Even though a few years ago there was this policy that we want to reduce our coal imports. Coal imports will be done at a higher prices because they are being done at international prices, right? Now, this higher price will, of course, naturally increase the cost of power production. But the indication that analysts have right now is that a lot of the regulators will be, sanguine about raising tariffs for power companies. They would not let power companies bear the cost of coal shortages.
Political issue. You seem to forget that.
On
paper, this argument looks very sound, but when people protest, then it will be a different picture altogether. But
yeah, that too in an inflationary environment, I can see that happening. But as of now, there are no indication of that. But the indication that analysts are getting is that we could see power tariff hikes going ahead to compensate a lot of these power producers, especially in places like Mundra, which have almost two big power generation plants. They could see tariff hike. That said, next up, spot power trading basically is going to go up. When you don't have, you're not basically getting power from your long-term purchasing, agreements. Then you go to the spot market to get whatever power you can, so that you can meet incremental demand. So that should also be beneficial for the Indian Energy Exchange (IEX), and we could see some benefit on that side. Lastly, the biggest beneficiary out of this entire chaos is Coal India. Coal India has indicated that it is going to ramp up production as much as it can. But at this point of time, it seems it's not even in Coal India's ability to meet the sort of demand that we are seeing. 38-year high power demand in this summer.
That is what I was saying yesterday, and you were making all those noises about ESG and all that kind of stuff. Anyway, so
Coal India basically, now how will Coal India benefit? So Coal India, of course, also provides coal in 2 rates. It already has one rate through which it provides to certain power plants, certain industries, manufacturing units, and then it has a sort of a spot market, which is also known as the e-auction market, where it generally sells coal at whatever the market price, price that the market is willing to pay to it. And those prices have been rising for the past 2 quarters, and it is possible that this will continue to rise because higher international prices will generally translate into higher e-auction premiums for Coal India. So these are the 3 ways ways in which this crisis can actually become an opportunity.
Well, fair point. So what do you have on the horizon, CJ?
Well, earnings, we are going to get into the thick of it. I mean, next week we are going to have 10 Nifty 50 companies which have a combined market capitalization of as much as $300 billion coming out with their Q4 numbers. So it's going to be all stock selective action. I am pretty sure that even the macro backdrop is going to, fade away a little bit, given that so much of numbers are going to come out.
Not really, CJ, because I think when it will largely depend on the macro backdrop, because if the sentiment is gloomy, then the slightest miss means that all these stocks will get punished very heavily.
But I hope that if the sentiment is gloomy, then even the slightest of outperformance also rewards very handsomely.
No, the slightest of outperformance means you will not get beaten. That's about it. You will be allowed to hold your gaze.
If you look at science performance today, it tells me a different story. That said, ICICI Bank is going to come out with its number tomorrow. HUL, Bajaj Auto, we have Axis Bank, Wipro, Maruti Suzuki coming out with all of these big heavyweights are going to come out with their Q4 numbers. So earnings will definitely be the driving force next week.
Well, with that, it's time to let you get back to your trading terminals. I hope you enjoyed watching this show. That's all that we have in this episode of Markets with Santo and CJ.
What are your weekend plans, by the way, before we let them go?
Well, maybe I'll catch up on a few movies.
Movies?
Yeah. Oh. What about you, CJ?
Well, I'm going to sleep and then I'm going to sleep some more. That's all. Anyway, please post your feedback on the comment section below and do follow us on social media, on Instagram, Twitter. We are everywhere, guys. So do follow us and we will see you on Monday morning, 9 a.m. sharp on YouTube, Money Control's YouTube channel. See you and have a great weekend.
Yeah.